Welcome to Byte-Sized Tech, where we blend casual conversations with insightful discussions on the latest in technology and gadgets.
Great to be here.
So today we're diving headfirst into the recent market. It's been a bit of a roller coaster, hasn't it?
Yeah.
Especially for tech stocks.
It really has. A lot of movement.
And we'll also try to, make some sense of this whole tariff tango that's happening globally, and maybe how that impacts the tech we all use.
Yeah, definitely. It's been a period of pretty significant shifts, and I think for listeners, understanding the undercurrents is really key. Helps make sense of what's happening with companies they follow, maybe invest in.
Exactly. It feels like one minute we had this monster rally in tech, and the next, poof, a pretty sharp pullback. The NASDAQ Q100 especially has been doing some interesting dances. What's the main thing behind all this up and down?
Well, a primary factor is definitely the ongoing uncertainty around international trade, tariffs, especially the ones involving China. They're right at the center. And while most other countries haven't seen new tariff hikes lately, the whole situation with China, it's still a really big concern for the markets.
And these tariffs on Chinese goods?
Yeah.
We're not talking small amounts, are we? The numbers sound pretty eye-watering.
They are substantial, yeah. I mean, when you factor in the reciprocal tariffs China's put in place, plus the earlier ones, like those related to the fentanyl trade stuff, the total rate on some Chinese goods coming into the U.S., it can hit 145%.
145%. Okay. Wow.
Yeah, it's cumulative. It just layers up and adds up to a really significant cost.
Okay, so 145.
Yeah.
That's definitely not just a little surcharge. And China's hitting back, right? They've got their own tariffs on U.S. stuff.
Precisely. China's retaliated. Their tariffs on U.S. imports are sitting around 84% currently.
84. Okay.
And what's also worth noting, maybe even newer, is they've started targeting American services, like movies.
Oh, interesting. So it's not just physical goods anymore.
Exactly. It broadens the impact, adds another layer to that whole economic relationship.
Paints a picture of a real back and forth. I even heard some whispers about different camps within the White House on how to handle trade.
Yes, there are definitely differing perspectives inside the administration. It often gets framed as that hawks versus doves debate on trade policy.
Right.
And those internal discussions, they also feed into the overall ambiguity, which, the market really doesn't like.
Yeah, markets hate uncertainty. Okay, so with this choppy market and all the tariff talk, how are individual tech companies actually dealing with it? Let's start with Tesla. They've had their swings, but I hear some investors are actually adding shares, despite the China connection.
Yeah, it's fascinating with Tesla. The investment thinking for some, it seems to go well beyond just the electric vehicles now.
Okay.
The rationale often circles around their energy business, which is growing, and their potential in AI, artificial intelligence.
Ah, right. The cyber cab stuff and robot day things they talk about.
Exactly those. So the key insight, maybe, is that Tesla's increasingly seen or positioning itself as a more diversified tech company, trying to reduce reliance just on that, volatile EV market.
Huh. So the cars are kind of the means to an end, like a stepping stone to these other potentially huge areas.
That's a good way to put it. You could maybe think of it a bit like Apple in the early iPhone days.
Okay.
The phone itself was revolutionary, obviously, but it was the platform it created for services that became this massive growth engine later on.
Right, the App Store, iCloud, all that.
Exactly. And the thinking with Tesla has some parallels. EVs are big, sure, but the tech underneath, the expansion into energy, into AI, that could be even more transformative long term.
That's a really interesting perspective. And let's face it, Tesla stock has always been, dramatic.
Oh, absolutely. Volatility is kind of its middle name. If you look back since the IPO, it's actually spent quite a lot of time technically in a bear market, down 20% or more.
Really? Even with the huge overall gains?
Oh, yep. Despite the impressive long-term growth. So for some investors, maybe this current turbulence is just seen as, another chance, buying into that longer-term vision at maybe a better price.
Okay, interesting. Let's pivot. Another tech giant, big China ties, NVIDIA. Now, surprisingly, some analysts seem pretty bullish on them. They think NVIDIA might be relatively shielded from the tariff storm. How does that work?
Yeah, the thinking there seems to be mainly about the core of their business. While they definitely have China exposure, the belief is they're somewhat insulated from the broader tariff impacts.
How so?
Well, it's also worth mentioning their CEO, Jensen Huang, has reportedly been pretty active trying to get exemptions, carve-outs from the tariffs.
Smart, if you can get them.
Definitely. But even if they don't get all the exemptions they want, what else is driving that positive feeling about NVIDIA?
Yeah.
It mostly boils down to AI, the huge, widespread adoption of artificial intelligence across so many industries.
That's everywhere.
We even saw reports like Spotify indicating a hiring preference for roles AI can't do yet.
And NVIDIA's chips, their high-performance GPUs, they're just fundamental to powering this whole AI revolution. They're basically providing the essential hardware, the picks and shovels, you could say.
So they're like the tool makers for the AI gold rush?
That's a very good analogy, yeah.
Yeah.
While a lot of the current AI investment is shifting towards software,
Right.
the underlying compute power from companies like NVIDIA is still absolutely critical. Oh, and related, Broadcom's another big player here, sometimes seen as like a poor man's NVIDIA, a way to get exposure.
Gotcha. Okay. Now let's talk Amazon. Probably in everyone's house, one way or another, they're being called a defensive technology name.
Right.
Because they're tech, but also retail.
That dual nature, yeah, that's key to their appeal right now, especially if the economy feels uncertain. They popped up on several, best ideas lists recently. Highlights their perceived stability, I guess, for a tech stock in wild times.
And it sounds like they're really focused on efficiency now, kind of like what we're hearing from other big CEOs. Exactly. Andy Jassy, the CEO, his recent comments really echo that broader sentiment we've heard from, like Jamie Dimon, emphasizing efficiency, managing costs carefully.
So tightening the belt a bit.
Yeah, but it's presented more as being proactive,
Yeah.
Ensuring strong performance by streamlining things, looking at management structures, not necessarily panic.
I also read Jassy talking about keeping a startup mentality.
Yeah.
How does a behemoth like Amazon do that?
Well, it goes back to their old day one philosophy.
Day one.
The core idea is trying to keep that agility, that innovation, that customer focus of a startup, even when you're massive. And the whole push for return to office after COVID, that was partly framed around that too, reinforcing culture, keeping that nimbleness.
Makes sense. Now, Amazon invests a ton of money.
Yeah.
CapEx, right? Capital expenditures, warehouses, robots, all that.
Oh, yeah, their CapEx is substantial, huge numbers. Jassy didn't give exact breakdowns in the recent shareholder letter, but he did say the lion's share. It's likely over half, maybe even up to 80%, goes into their distribution and logistics network. That massive ongoing investment is what makes that fast delivery happen.
But tariffs, with all the tariffs on Chinese goods, how does that affect Amazon? Especially with so many sellers on their platform coming from China or linked to China.
That's a really critical point. The general expectation industry-wide is that a lot of Amazon's third-party sellers, they'll probably have to pass on at least some of those tariff costs.
To the customer.
To the customer, yeah. Which could potentially hurt Amazon's price competitiveness, maybe, if other retailers have supply chains less exposed to these specific tariffs.
So Amazon wants low prices, but tariffs might push some prices up anyway on this site.
Precisely. Look, Amazon will no doubt try to absorb some impact, push sellers to absorb some. But it seems almost unavoidable that end users, us, will likely see some price hikes on certain goods, anything sourced heavily from China or by China-based sellers.
Okay, one more on Amazon ads. Their ad business. I heard projections are it might hold up better than some competitors, like Meta.
That's definitely a significant plus for them right now. If you compare projected ad revenue performance, say, Amazon versus Meta, Amazon's expected dip looks smaller.
Interesting.
It suggests Amazon's maybe in a relatively stronger position in the current ad market, which makes it look more attractive to some investors right now.
Okay, got it. We hit the big tech names.
Yeah.
What about more traditional old economy companies that are getting tech savvy? Walmart came up.
Yeah, Walmart's a really good example there. A classic old economy player that's made huge strides in tech adoption. And they seem to be seeing results. They just reaffirmed their annual guidance, which shows some resilience.
Good for them. And entertainment, Spotify, Netflix. How are they expected to fare in this climate?
The general thinking there is companies like Spotify, Netflix, relatively low-cost entertainment. They tend to do okay, even if the economy slows down or, dips into recession. Though some recession forecasts are being pulled back now.
Right.
The idea is people might cut back on big-ticket items, but they'll probably keep their, relatively cheap streaming subscriptions.
Yeah, gotta have your shows and music. Okay, quick stock note. I gather Meta was sold in some portfolios recently. Spotify added instead.
That's correct. And looking back, Spotify has actually performed better relatively since that switch was made.
Huh.
Now, Meta could definitely become a buy again if the economy weakens further, but right now, yeah, the preference seems to lean towards Amazon, partly because of those ad revenue projections we talked about.
Okay, we've covered market reactions, company moves, but zooming out again, I've heard some pretty harsh words about how policymakers have communicated all this stuff recently.
Yeah, the assessment of the communication from policymakers, it hasn't been great. Terms like horrific, botched policy rollout have been thrown around.
Wow.
There seems to be a big disconnect between maybe the initial messages and then the later explanations. It's led to a lot of confusion, more uncertainty. You even had different people interpreting it differently, like Bill Ackman having one take,
Hmm.
others another.
And that kind of messy communication, it has real effects, right?
Oh, absolutely. There's a definite concern that all this policy uncertainty is actually causing businesses to pause, to postpone decisions on building new factories, other big long-term investments.
Not good.
Not good for future growth, no.
Let's circle back to Apple quickly. Tariffs on Chinese goods.
Hmm.
How are they handling it? I saw something wild about airlifting iPhones from India.
Yes, that report was quite something. Apparently, Apple airlifted a huge amount, like 600 tons of iPhones made in India to the U.S.
600 tons.
Yeah, and the interpretation is pretty clear. It's likely a strategic move to try and bypass the tariffs that would hit iPhones made in China.
That's a massive logistical workaround. What about the long game? Is making iPhones in the U.S. ever going to happen seriously?
Well, it's been talked about for ages, hasn't it?
Yeah.
But the cost estimates are just huge. Some suggest it could hike the price of an iPhone by like 90%.
Whoa, okay, that's probably a non-starter for competitiveness.
It seems like a massive hurdle, yeah. So airlifting from India, diversifying production a bit, that looks like a more practical, maybe shorter-term fix. Plus, Apple's constantly negotiating with its manufacturers, trying to mitigate these cost impacts behind the scenes. Their supply chain is incredibly complex. That gives them some flexibility.
So bottom line for Apple right now in the U.S., with tariffs buzzing around, what's a priority?
Look, it's a really critical time for Apple domestically. They're pushing hard on services revenue. They've got Apple Intelligence rolling out.
Right, big stuff.
Very big. So keeping those upgrade cycles going, keeping users locked into their ecosystem, that probably outweighs short-term margin worries on the hardware itself. They might just have to, eat some of the tariff costs to keep customers happy and adopting the new software and services.
Makes sense. Wow. Well, this has been an incredibly insightful deep dive. Market chaos, company chess moves, global trade drama, definitely a lot to chew on.
Indeed. It really shows how interconnected everything is, doesn't it? Global events, policy choices, how companies react. It all shapes the tech landscape we see. Understanding these links is crucial.
Absolutely. Thanks so much for breaking it all down for us.
My pleasure.
And thank you for tuning in to Byte-Sized Tech. If you enjoyed this deep dive, please do like, comment, share, and subscribe for more fun tech discussions. We really appreciate the feedback. Until next time.